Highlight today is what's been in the news the last several days, and maybe hopefully, finally, people will realize what truly moves price. Other people stuck the wrong way. I think I heard that somewhere. If you watch over 200 videos I have throughout all of them, we talk about after you sell it, you're a buyer. After you buy it, you're a seller. So your job is to find tools that allow you to get timing and location that create what's been going on in GameStop and where they're trying to find stocks that have a lot of short interest, meaning when people are short a particular stock, they have to come back and at some point cover that option, cover that position by buying it. So what these guys in these groups have done is they just go and buy the outright or get themselves in a position to chase it up or to buy it to get long. And then this dynamic chases it up and way overvalues the stock. But I got news for you. At that moment in time, when a buyer and seller agree at price, that's what it's worth. Yeah, it'll come off. And yeah, there's a lot of people who are up paper money in that group that'll be like, I didn't think a winner could turn to a loser, because they'll be the opposite of the short squeeze. So now there's a short squeeze. And by the way, if 10 people use that phrase, 9 people couldn't tell you what that means. The dynamic of what a short squeeze is. Why does it make it go up? And it's simply because to cover any kind of short, you're a buyer. And you have to buy it at some point. So not only are you a buyer, you're an emotional buyer because it keeps running away from you and the chase is on. All right. You have to buy it. Think about when you're bidding on a house and 2 other people are bidding on it. You don't have to buy the house, but you feel like you do. Imagine if you had to buy the house, the emotion of having a house you really wanted and 2 other people are bidding on it, you're emotional. Imagine if you had to buy it. That's this dynamic of a short squeeze. They go into a stock that is vulnerable to the shorts having to chase it up. And there's so many of them in this group that they create that buy action to move it and move it and move it. The problem is the opposite's going to happen. Meaning when that short interest is covered, now you got everybody, too many people long, sitting there going, now what? And they're going to be that chase back to the downside in that stock. And they're going to be people who bought it at $50 and seen it go to $600 and see it go to $40 and $30. And they're going to be like, what happened? Where's my money from there to there? There are going to be people who bought it at $600 thinking it was going to go to $1,200. And they're going to get called. And I think a lot of these brokers are creating 100% cash you have to have in your account. They're not allowing people to do it on margin. And I don't blame them because you get a lot of people retail that are not all of them are going to make money on the trade. I don't care how much paper money that it shows and how much of a head start they might have on it. Most people think something's going to go up forever. They stink at getting out for a loser, and they also stink at getting out for a winner because this word comes in, greed. So here's the other thing that happens, and this is really important about day trading, whether it's stocks or futures or the markets we trade or the individual stocks. When you see something go from $50, let's say you're in at $50, and you see it go to 300, right? And then you see it come back to 100. You're still up $50 a share, right? Nope, not in your mind. You're down 200 because you had it print 300. You're looking at this as your maximum gain, and anything less than that, this is the number your mind focuses on. You're still up 50 a share in reality, but mentally you're down 200 because you could have sold it. If you'd have sold it at the very high and the very top, you'd have been up 250. So the difference is 250 to 50 is 250, or 50 from 250 is 200. And it's like, well, I got to get it. If it goes back up there, I'm going to get out, right? And if it goes back up there, they either don't or it never gets back up there. So that mentality is going to happen at some point in these high flyers because the shorts aren't going to be squeezed forever. So then the longs get stuck. And what are longs? Sellers. Remember that. So if you're in this group and you think that there's a lot of opportunity, just be careful and still understand you got to manage the position, which means if you're able to get in something that they're doing and it rallies, scale, start taking a little bit of profit. Don't be greedy. Don't worry about how high it's going to go. Worry about protecting the position and worry about how low it could go. Everybody says it's going to go to 1,200, it's going to go to 3,000, it's going to go to a million. Why not? But you got to focus on your risk. And how do you manage your risk? You scale out. So then if it keeps going up, you're not pissed because you got something on. If it comes back off, you're not pissed because you took some off. And that's not just in that particular scenario. That's in all trading. That's in any kind of way to reduce the mental fear, greed in positions. So let's say you just bought it here because it went through an iceberg and some longs puked, and you bought it because you anticipated it was going to look like this. If you're looking to cover here and you bought it right there, but it only gets to there and then it takes you out for a small loser, that ain't trading. That ain't you got to be able to scale, especially in a market that goes from '01 to '08 and gives you 7 points. It's a pretty nice move. Not to take any profit. I don't care what your initial goals are. It's a big difference if you were to scale out, take some profit, and even if it does come all the way back down, at least you got something to show for good location. And that's where people fail. They get so greedy, they got nothing to show for a good location and a good entry. Because again, they think that their trade is going to go up if they're long forever or down if they're short forever. So when this short squeeze fades, you're going to see all these longs and people holding the bag, and then they all might be saying, "Why didn't you tell me to get out?" But I do think it's an interesting story to follow and see where they're at next and the next stock they're getting into and when they're holding the bag and when they get squeezed. I've been saying it for years, and I didn't invent it. After you buy it, I did invent that line. After you buy it, you're a seller. But I didn't invent the concept of when you're long, just know what you are now, and you are a seller, period. And when you're short, you are a buyer. I've seen people online try to explain how you borrow stock and then have to repay it later. They get into this long, complex description of a short. Short is selling something you don't have and you got to buy it back later. Figure that out. Draw it up. Well, how do I sell something I don't have? Well, you're able to do it. Okay. We want to get into the long technical explanation and even get you more lost. It's just the opposite of buying something. You think it's going to go down, you get short, and then you have to sell first, buy second. When you're long, you buy first and sell second. All right. That's what would be on the quiz. See you guys tomorrow. Just be careful. Don't continue to have the expectation for volatility middle of the day as we had in the first couple hours, right? There were some wicked moves. Do not add to losers because these ranges are extended. This is when you get your butt kicked. Don't ever do that. But you really can't do it today. And don't think that it's going to come back. Take your small losses. Those are like foul tips, believe it or not. Don't break your rule. Whatever your exit is for a loser, do it, including anybody that listens to this video that's part of these short squeezed names that might surface as we go through January and February. There's a be a pig, not a hog.